So we're going to go ahead and get started. Again, welcome to the ForeclosuresDaily.com webinar. I'm your host, Nancy Wallace-Laabs. And what I thought is I would just go ahead and say who I am since I'm at the very beginning here. So welcome again. Foreclosures Daily is your trusted resource for converting off-market leads. And I'm the host tonight, and I'm really glad everyone's here, and I'm very excited to have you meet our guest speaker. So I am a licensed real estate broker here in Texas. I also have written the book Winning Deals and Heels. I've spoken nationally with a specialty in off-market investing. I've been investing since 2006, and I focus on single family homes. And I love using the pre-probate leads to uncover low competition opportunities before they hit probate. And I get those leads from ForeclosuresDaily.com. As I mentioned before, I am the founder of Money Making Mamas with my daughter Kelsey, who's in the picture there with me, where we help parents and professionals build wealth through smart real estate strategies. We share insights weekly on the Money Making Mamas podcast, which you can find on any of the, Apple, Spotify, and we cover not only real estate investing, but entrepreneurship and family life. So if you're curious about pre-probate training or free tools to support your investing journey, check out my website at Money Makin Mamas. That's with no G, anytime. And give me a follow, guys, on Nancy Wallace-Laabs and also my YouTube channel. Now, before I introduce tonight's expert speaker, I'm going to walk you through what makes ForeclosuresDaily.com such a powerful resource and what you're going to be getting access to as a client. So first of all, Foreclosures Daily is your trusted nationwide real estate partner, and they've been in business since 2004. So they have a nationwide reach connecting investors, realtors, attorneys, and first-time buyers with high-quality leads. They're an industry leader, and they've become the internet's top destination for detailed, timely real estate information. I've personally been using them since 2018. And some of my most famous deals have come from the leads here. Their expertise that you can trust, that they have a commitment to excellence, and it ensures you receive the most accurate and up-to-date data available. So why are they different? Well, first of all, their leads have real estate. And I've used other list companies. Andrew, you can probably say this too. And I've used list companies and they don't have real estate. So that's kind of if you're an investor or a realtor looking for real estate, that's kind of a waste of your time and money. So they have specific information like they'll have the value of the property, the owner information. So you have all kinds of ways to contact them. Depending on the type of leads that you're getting, they're delivered daily, weekly, or monthly. And they have the property appraisal insights. So you can benefit from the property appraiser data on most data types. Like it'll tell you like what the property is worth, if it's a land, mobile home, condo. If you have a certain way you market to those types of investment properties, it has all of that information on the list for you. Specialized for real estate, unlike reports from other companies, their data is farmed exclusively for the real estate market. And they prioritize delivering up-to-date, targeted information to keep you ahead. And they're a game changer. So if you haven't checked them out, you need to check them out. So what kind of leads do they have? Well, you name it, they got it. So they have probate, pre-probate, which is what I work. Pre-probate just means the person has recently passed away. And in Texas, we can actually purchase property and sell property without it actually going through a probate process. It's a process, but we can do that. They have absentee owners list, which is also a good list. Divorce, distressed, code violations, eviction list, inheritance, auction list, tax lates, Liz Pendez, I always say that kind of funny, and a cash buyers list. So I can't think of any, they don't have driving for dollars, okay, because we all know that's how you create your own list, right? And I have a funny one for you guys. I went to the lake this weekend and we were boating for dollars because there were for sale signs on the lake we were on for different houses. So I just thought I'd throw that out there too. Now, you don't just get a list. So you get a whole support system with ForeclosuresDaily.com. So think of it as your marketing toolbox. So everything that you need to market to leads. So I know when I first started with them, The gal that I work with, she gave me the messaging, how to do it, how often I should do it. So they have companies that do direct mailing. So you can automate this if you want to. They have ringless voicemails, because when your phone starts ringing, you're going to want to make sure you're capturing those calls. They have sample letters. They can get you in touch with a company that has websites that if you need that, private money lenders, skip tracing. So when you mail something out and if it comes back, the money is in the follow-up. So you want to be able to skip trace what that means is like, okay, the person moved. I need to find out where they are, and you can skip trace. And then you can use companies like Pat Live, Call Porter, Answer First. Like if you don't want to answer the phone, there's a way that Foreclosures Daily, they don't have the service, they can get you in touch with that. Now, you'll also get a book that Nancy wrote, Winning Deals and Heels. So this was my first book that I wrote. And it's just about my success story and how me and 9 of my investor friends, how we overcame our challenges. And the cool thing about the book, you go on to Amazon to purchase it. But as a new client, you get it for free. But the book sales do support a nonprofit here in Texas called Hope's Door, which helps families heal from domestic violence. Now, I talked about if you wanted to automate this. So we actually had Wendy Henderson on the podcast or the webinar a few months back talking about marketing by hand. So if you are looking to get a list and you just don't have time to do the list, or you don't want to write the letters, they actually have a system where they can just go in, log into your account, download your list, and they can write these letters for you and send them out to the list, or send them out to your potential lead source. So what that means is when they send out the list, all you're doing is sitting and waiting for the phone to ring to talk to them. So you can get with Wendy, and that's another resource that you have access to through foreclosuresdaily.com. Now, oops, sorry, went fast, went back there. Okay, now we get into the meat of the webinar, right? So I want to introduce Andrew Litchfield, and this is where you want to get your pen. Mute your distractions. It's the part you don't want to miss. I was fortunate enough to hear Andrew's presentation a while back. It's very fascinating. I just love the way he markets. So he's made a serious mark in the world of real estate. And he started at an early age, just a tender age of 19. He's only a few years older than that, right, Andrew? And he jumped in, and he has completed over $100 million worth of real estate deals that he's going to talk about, and how he has also used Foreclosures Daily as part of his marketing strategy. He's going to dive into the unique approach of structuring off-market leads, like using platforms like Foreclosures Daily, and it's been a key to his success. His impact, though, goes further than just this. He's got coaching programs. He's been becoming a great mentor to many people, and he launched you have a nonprofit that you also do, right, Andrew? So
Yes.
without further ado, I'm going to stop my share, and I'm going to let you share, Andrew, and I'm going to have you take it away. So hold on. Okay, there you go.
Okay. All right, Nancy, thank you so much for the introduction. I'm going to just go to the top of my presentation. You can see my screen, right?
Yes.
All right, beautiful. Cool. Let me just get the present mode and we'll get started. All right, beautiful. All right, well, thanks, Nancy. Thanks for the warm introduction. Thanks Foreclosures Daily for having me on this webinar. I've been working with Foreclosures Daily for a number of years now. And I would say 40 to 50% of my leads come from probate and come from Foreclosures Daily. Some of the case studies that you're going to see tonight are from lists from Foreclosures Daily. So I'm a huge advocate of working with them and the lists that they provide. Obviously, you've got to put in the work in order to get that lead to become an actual deal. But the fact that you can have these lists come to you once a week and updated is a huge plus and a huge advantage to getting started in real estate. All right, so what I'm going to do tonight is I'm going to take you through just very high level what my coaching program talks about more in depth, and that's all these different types of deals and ways that we can turn these properties into profit. I'm going to be talking about the right mindset to have, because I think that's one of the most important things when getting started or being involved in real estate and wanting to get to that next level. Uh, just a quick background on myself. I've been a real estate developer, investor for about 16 years now. So I started at the age of 19. I was going to school. My friend told me about a real estate seminar. It was actually a Rich Dad, Poor Dad seminar, which I had not read that book before that night. And that seminar got me hooked. One of the biggest lines that they said was to make money while you sleep. Obviously, what they were referring to was owning rental properties where, as long as your tenants making paying the rent every month, you should be going to your mailbox and grabbing the rent from there by hopefully not doing anything. That really got me started in real estate. It's been a crazy journey, like I'm sure it is for a lot of people. I'm now 36 years old right now, and I have been developing in mostly in the Massachusetts area, mainly in Boston and areas of Boston. And I do so many different types of deals that I want to share with you tonight, from single family flips to condo conversions to rezoning of land deals to wholesaling. And it all starts with finding the right deal and creating that pipeline. In addition to being a real estate expert, I'm a mentor and a coach. So I have a real estate coaching program, an 8-week program that over the last 2 years, I've had over 60 students go through. They range from not first-time beginners in real estate to GCs, real estate agents that want to get into real estate game, to even experienced real estate developers that want to take their business to the next level. Just to give you a little bit of context, at any given time, I am developing between 15 and 20 properties going on. I have a couple of full-time project managers that run the majority of my projects. I use some great project management software called Builder to really systemize my business. And over the last couple of years, that's been the main focus. In addition to my profit generating side of the business, I also own a lot of rental properties. I own about 50 rental properties in the city of Boston and other areas of Massachusetts, and roughly about $20 million worth of real estate. So it's taken me a while to get to this point, and probably one of the main reasons why I love helping other people get involved in this, and hopefully them me teaching them to not make the same mistakes that I had made, so they can get along further and faster. And like Nancy mentioned, I'm an active philanthropist. In addition to being a donor to many organizations, I'm an active board member of an organization called Silver Lining Mentoring, which is a youth foster care nonprofit creating matches between mentors and mentees. I'm a mentor to a youth in foster care, and it's been super rewarding for me. All right, so let's talk briefly about the power of building a robust pipeline in real estate. I heard this once, and it definitely applies to real estate. And it goes something like this: creating a successful pipeline in real estate is like pumping a well. In the beginning, you have to pump the well for a very long time before you see any water. But once that water comes out and you have a steady flow, all you need to do is maintain that flow by pumping once in a while. And so I think a lot of us can relate. If we're first getting started in real estate, we're not making money in the first month, the second month, maybe not even the 6th month. But if you put in that time and effort and you continue to work your plan, eventually that water is going to start coming out and you're not going to be able to turn it off. And so when I talk to people that are first getting started in real estate, that is the main topic, is to make sure they know and that their expectations are set, that you can't just get right into real estate and make money right away. It's possible, of course, but just know you have to have patience when you're getting started in real estate, or a different type of real estate that you're currently in right now. For instance, if you're a real estate agent, it's different than becoming a real estate developer or a real estate investor and finding that first property. Okay? All right. So let's talk a little bit about mindset. And I'm a big proponent of this. At the age of 19, I was really big into personal development, reading a lot of books, going to a lot of seminars, and I feel like that has shaped the way that I run my business and my family, and why I'm successful in my standards. And I think that's really important to figure out what success means to you. And so, in the beginning, we all want to make the money, but in the end, it comes down to our lifestyle over money. And so let's take it through a couple of steps. First, we need to hustle. If we don't have the money and we want to become that real estate investor and we want to start flipping properties, we can't just sit around. We've got to hustle. So hustle first, getting clear on what you want, and then start hustling, aka pumping that well. Once that pump is flowing, we want to maintain our success. So how do we create systems around what we're doing to make things easier for all of us and more efficient for all of us? But then you're going to get to a point where you have your systems in place, you've already hustled, and then you want to create that harmony over hustle. I've read this in a book, I believe, by Rob Dyrdek, the guy from Ridiculousness. He's got a lot of great stuff in his podcast, and he told me about harmony over hustle. So shifting the way that we look at our real estate or our business from just business to what is the harmony first. Like, what do I want my lifestyle to be, and how balanced do I want my lifestyle to be, compared to the amount of money that we want to make. So some key things that we need to be working on is our mindset. Very, very important. You can't have a scarcity mindset in real estate. You need to have that abundance mindset. So shifting from the scarcity thinking to there's enough real estate, there's enough deals out there for everyone. I hear this all the time when we talk about probate deals, and I refer people to Foreclosures Daily. Well, they're going to be sending me the same leads as they're sending to everyone else. So why I'm never going to get one myself. And once you start thinking that way, you're already in that scarcity mindset. So having that mindset that you're going to hustle more than the other person, and you're going to make those follow-ups, and you're going to make all those calls, because trust me, you got to have the right mindset in order to achieve the success that you want to achieve. Another type of mindset that we want to have is a gratitude mindset. It's really important to be grateful for what we have while we're in pursuit of what we want. And I see this time and time again for people that are just getting started, or maybe they're a couple years in and not making the amount of money they want to make, but they made something. And all they can talk about is that they haven't made enough money or as much money as they want to make. And that's not nurturing a gratitude mindset. Nurturing a gratitude mindset is saying, wow, look at what I've achieved so far. It may not be where I want to be, but I want to be grateful for what I have right now, because that's how I'm going to get more of it. Now, I know some of this stuff people already know, but for people that don't, this is such an important part to get into real estate, to be an entrepreneur, and to own your own business. Next, we want to surround ourselves with like-minded people, with people around us that have a growth mindset, that want the same things that we want, because it's going to be a lot easier to work and to keep pushing past certain obstacles if we have other people around us that want that same thing. All right, let's jump down. If I can go. All right. Next, and I haven't coined this phrase yet, but it might be my next book, Nancy. It's called the big check mentality. And I want you to think about the majority of people that work a 9 to 5 job, right? Every 2 weeks or every week, they're getting a certain paycheck. They know how much that paycheck is. It's usually not that big of a paycheck. And that big check mentality is switching our mindset from getting those small checks consistently to getting those big checks. And I know this is real. When I got my first check, 20 years old, I got a check for $5,000. Now, it doesn't seem like a lot to some people, but at that time, it was everything. And seeing that in front of me and seeing a $5,000 check, I knew all I needed to do was add another zero to that. And that is what I call the big check mentality. So visualizing the success that you want. You hear this all the time, creating your vision board, creating affirmations. One affirmation that I say almost every day is money comes to me in increasing quantities through multiple sources on a continuous basis. Write that down if you don't, because I think Bob Proctor told me about that. And it's been super helpful for me because it really hits all the points, right? I want to make more money, and I want to make it from multiple sources, and I want to make it more continuously. All right. So visualizing that and having the abundance mindset, very important. That check of $5,000 goes to 50,000, goes to 500,000, goes to $1,000,000. And once you've got that first check, you're creating that reference point in your mind. All right. So let's talk about developing our money blueprint. And if any of you have some pens, I want you to write down this book called The Secrets of the Millionaire Mind. Secrets of the Millionaire Mind by T. Harv Eker, Eker. It's a great book. Most people already know it. But if you don't, one of the biggest takeaways that I got from that book is recognizing what my current money blueprint is. And that blueprint is from our past experiences. It's from the people that we grew up with, our parents, our grandparents, our family that's around us. They had a certain money blueprint. And through no fault of our own, we inherited that blueprint. And so after reading this book, it really opened my eyes to seeing how I looked at money and how I can change how I looked at the money. Right? I grew up, no one in my family was in real estate. No one in my family was an entrepreneur. They all had regular jobs. And so I had to change my money blueprint from going from, an employee mindset to an entrepreneur or a business mindset. Identify those limiting beliefs, right? What is holding you back financially? And it's a really important thing to think about, because it's something that we don't think about, and maybe we don't realize why we're not getting the success or making the amount of money that we want to make. And it could be due to what your current money blueprint is. Reframing your mindset and then practicing those new habits. Someone could have a money blueprint of I save all of my money, and then I have to use it on something else. And it just keeps happening. They save up a certain amount, and then something comes up and they have to use it. Right? And that is a money blueprint. It's something that we can work on actively changing and creating new habits around. All right, so let's get into the meat and potatoes. Let's talk about real estate, and I'm going to give you some case studies on different types of properties that I work on up in the Northeast area. Now, I know that all of you coming from different areas, whether it's Florida, Texas, the Midwest, and every area is a little bit different. I think the reason why I stick to being a mentor and a coach in a certain area is because I know that area really well. All right. And to learn a new market and to learn a new strategy the type of strategy that you need to learn in that area to be successful takes time, and there's mistakes that can be made. So I'm an expert in where I am, and that's why the majority of my students are in Massachusetts, New York, Connecticut, Rhode Island, New Hampshire, areas where these real estate strategies will work and where I know the market much better than, let's say, Texas. So let's talk about building that robust pipeline. And the reason why I like bringing this up is because it was one of the biggest mistakes. One of the mistakes that I made early on was not knowing, not having my properties or my projects in different stages of construction as I was buying them. For instance, I bought 10 projects all at the same time or within a couple of weeks of each other, and they were all at different stages of construction. And if any of you are real estate developers or real estate investors, knowing that you're not going to get paid until that property is sold, whether it's 3 months, 6 months, a year, and in most cases, for me, when I do condo conversions, it's at least a year until I'm going to get paid when I sell the condos. So that full 12 months, money is always going out, 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 and none of it is coming in. That's why it's important to have the right pipeline and properties at different stages of the pipeline. So we have 3 different stages. We have acquisition, we have construction, and we have properties for sale. So what I'm saying, and most of my students ask me this, hey, I'm halfway through my construction project. When should I look for the next one? When should I buy the next one? And what I tell them is when you're almost ready to put that property on the market, go find that next property, because you don't want to have too much all at once, or you're not going to execute the right way on every one of them. You may go over timeline, you may go over budget because you have too much going on. That's what happened to me when I first got started. I bought too many projects at once, was very ambitious, and none of them were on time and on budget. Thankfully, the market bailed me out, but it could go the other way. So acquisition, we want to continuously source new properties and opportunities. And then on the construction side, we're managing ongoing renovations and development. And then when the property is for sale, we all know that we receive an offer, we're not going to close for 30 to possibly 60 days. And so, that property is on the market. We should be looking for that next property. Just make sure that you don't have too many properties in one stage. It's important to have them spaced out. If I had 10 properties going on, I want 3 in acquisition, 3 in construction, 4 in for sale. All right, next, the deal is the gold. This is one of my modules for my coaching program. The full week is talking about the deal is the gold, and using companies like Foreclosures Daily and other list companies or different ways of generating leads is so important in our business, because when we find the deal first, we're not at the mercy of a wholesaler. We're not at the mercy of the property being on the market and having multiple buyers. We're getting that property first, right? We're cutting out all the middlemen. And once we have that property, now we can decide what we want to do with that property. For instance, here are a few examples. I find a property, I could wholesale that property to someone else. I could do the property myself. I could fix and flip it myself. Or I could partner with someone on that property. And I do a lot of partnerships, especially with my students. For instance, let's say that I have multiple construction projects going on and I can't handle any more construction. Well, maybe if I find a good deal, I could partner with a GC, partner with someone that knows construction, and I could say, all right, we'll do this deal 50-50. I brought the deal and I just make sure that they run the construction well. All right, so that is different ways of how we can use partnerships to grow our business and to do more deals without the higher risk. We're mitigating our risk by partnering, especially obviously with the right people, but partnering with people that can add value in certain ways. On the other side, let's say that I can handle the construction, but I don't have any money. I don't have any investors. Well, maybe I can bring in a money person or an investor to invest with me, and I give them a part of the deal, and now I can still do that deal, and I bring in that and I give a little bit of equity away, but now I'm still doing it rather than you either not buying it or just wholesaling it for a small fee. So you decide where and when you want to get involved in projects, right? If you have too much going on, Maybe you want to partner with someone else. Maybe you want to wholesale it. I feel like your success in this business really depends on your pipeline strength. So very important. Obviously, when you get and you start doing projects, you want to execute on those too. So let's talk about the types of deals that we can find through these leads with Foreclosures Daily and other driving for dollars or talking to wholesalers or talking to brokers. So in my area, the main things that I work on are single family flips. I work on condo conversions, which I'm going to get into. I work on the BRRRR strategy, which I'm sure a lot of people already know. And I also wholesale properties. One thing that I'm not showing on here is I also rezone a lot of real estate in the city of Boston. I like to partner with people. And let's say I come across a property that is already in good shape. Well, if I don't buy it, what if I have a great realtor? Or what if I'm a realtor and I can list the property for them? Right? There's so many different ways for us to make money in real estate. And it all starts with finding that right deal. So you could find a deal that doesn't need any work, and you have a buddy that knows the area really well. He's a realtor, and he could list the property, and you get a nice referral fee. I've done that many times. So we only do good deals. Really important. I know a lot of people just want to do a deal. I think it's really important that you have your structures in place, that you have your analysis in place to make sure that you're only doing good deals. So what are the key components that I look at when I'm looking at what is a good deal or not? Location. I want to make sure that I prioritize the properties that are within 45 minutes of where I live. Any properties outside of that, I am not going to do well because I have to drive so far. I'm not going to be going there every day, which is what you need to do when you're running a construction project so that mistakes are not made and that you can correct things as they come up. I always look at what the upside potential is on a property. Can I add value by rezoning that property or by expanding the existing footprint or by adding square footage to the basement or by adding another bedroom or multiple bedrooms from going a single family to a two family? There's so many different ways that we can provide some upside potential in properties. And then last but not least, I always want to stay conservative with my numbers. I want to ensure that my financials make sense even in the worst case scenarios. And when you find yourself looking at a deal and the numbers don't work, but you say to yourself, well, I think I could sell it for like 10 grand more. And I could probably do the renovation for not 80 grand. I can do it for 70 grand. I promise you, you're making a mistake. Be conservative with your numbers and don't try to make the deal work because in the end, you're going to waste your time by doing this whole project. 6 months goes by and you end up making no money. It's happened to me multiple times. I only say these things because I've experienced them myself. All right, how do we create accurate projections? So I'm going to share with you really high level what the deal analysis that I use. Bigger Pockets has a deal analysis. I'm sure there's multiple other ways where people can analyze deals, right? So we want to have the right deal analysis. We want to know what our margins need to be. And you want to write this down too. What I like to see is that my profit to sale is about 15%. Profit to sale, 15%. So if I'm going to sell a property for $1 million, I want to make at least $150,000 on my deal analysis before I purchase that property. We want to have accurate construction budgets. We want to have a stock list. We want to capture all of our expenses. So my deal analysis includes my construction budget. It includes my stock list. Like I am writing down how many toilets I need, how many vanities I need, how many kitchens, how many cabinets, how much tile do I need? I want to know all those numbers because if you've been doing this and you're just starting out, what's going to happen is you're going to spend all this money on the project and then it's going to come time for spending your money on the finishes. And you're going to say, well, I don't have enough money left. And you're going to get Home Depot finishes when you should be getting really nice finishes because that is what sells the property. So make sure that you create that stock list and your construction budgets from the beginning. and that you always are looking back at that deal analysis and your budgets. Now, I know you can't do this, but I always tell my students, always run the deal by me first. I've done too many bad deals to not do another bad deal, and that's why I want to make sure that none of my students or anyone that I'm working with or people are asking me are doing bad deals too. All right, we're going to talk a little bit about a deal analysis overview, and I'm going to get into a little bit of a case study, then we'll talk about this. As you can see, I wasn't lying. We're going to go over a quick case study, which is 15 Mention Street. This is in Boston. This is a regular single family flip, mostly cosmetic. With cosmetic, I'm doing new bathrooms, new kitchens, paint, exterior paint, I think I refinished these floors. I was able to source this deal from Foreclosures Daily. Okay. One of my students found this deal. He made $2,500 up front on this deal to sell it to me. Now, one thing you're going to know when it comes to leads in general, but especially probate leads, is that they take time and you need to follow up. So this was an important thing to note, is that I made contact back in April of 2021, and I didn't purchase the property until December, right? So what's that? 8 months? About 8 months it took of continuous follow-up to finally land the deal. I bought the property in December. I completed my renovations by April, about a 4-month renovation, and I sold the property right in June. So this was kind of what I would call my textbook single family flip. And in and out in 6 months, and we made some decent money. You can see my before and after picture right here. Nothing crazy. And then I'm going to show you, whoops. Here's what my high-level deal analysis looks like. So let's look on the left-hand side. I have my purchase price. My renovation costs were roughly $94,000. So I was all in about $533,000. I sold the property for $700,000. I had to put down about $70,000. Back in 2021, even hard money was very cheap, and I actually paid 8.5% instead of that 12%, which is typical of what hard money lenders pay. I raised some capital from investors. That's a whole other topic that we can talk about. But I raised capital from investors, about $100,000. I paid them a 15% interest rate. You can see that on the bottom left. And so that is calculated in my analysis, and that number is subtracted before I show you what my actual profit is. Now, if you look on the right-hand side, you're going to see what my other cost assumptions are. It's not as easy as saying, oh, I bought it for this, I'm spending this much, and I'm selling it for this. What about all those hidden costs that you don't think about? Insurance, taxes, closing costs, selling closing costs, my realtor fees, my interest. So many different things add into this. All right, so you can see my financing. I have my hard-money lender. I paid about $18,000 to. I paid 2 points to the origination. And then my secondary, that investor who invested $100,000, in 6 months, he received about $7,500 back on his investment. So after selling the property for $700,000, I was able to achieve a profit about $81,000 on this property. All right. We'll keep it going. Let's talk about condo conversions. I think this is something that Nancy was really interested in hearing, because it only really matters in certain markets, only really works in certain markets, and unfortunately, not so much in Texas. Maybe not so much in Florida. In the Northeast or in cities, it works very well because there's a high demand for condos. So in the area in Boston, the reason why is because there's not many single families in this area. It's mostly condos or multifamilies. And so what I'm able to do is I'm able to take that multifamily, let's call it a 3-family or 4-family, or you may call it a 4-plex or a triplex. I'm able to take those 3 apartments and turn those into actual condos, individual condos for sale. So a new owner will buy that individual condo. And so my bread and butter, in addition to single family flips, is to buy a 3-family, do a full renovation on all 3 apartments, and to sell those individually. Really high level, the value that you're created by doing the condos is pretty significant. For instance, in the city of Boston, some areas, let's call it the area of Dorchester, I'm able to buy a, let's say this property's already been renovated. I buy a 3-family for $1 million. If I want to sell that 3-family as a 3-family, it sells for $1 million. If I want to sell that 3-family as 3 separate condos, it's going to cost me a little bit of money, not much, but I can sell each of those condos for $500,000. So now instead of selling that property for $1 million, I'm able to sell that property for $1.5 million. Obviously, there's some costs associated with that, but there's a lot of value that can be created by doing condos. I don't know why it says number 4. It says approval cannot be denied, actually. And you have to have separate utilities. It's a whole. So if anyone has any questions on that afterwards, I'm happy to answer anything on the lines of condo conversions. I'm going to show you a quick example of a condo conversion I've done in the past. This was in Dorchester. It was actually a legal 2-family. So in addition to doing condos, I was able to rezone this property into convert it to a legal 3-family. I purchased it for $640,000. I spent about $510,000 in renovations, and I was able to sell the property or the 3 condos for just over $1.5 million. In the end, the project took about 15 months, a little bit longer than projected, but I was able to make roughly $250,000 on this. So I know it takes some time in order for us to achieve this big profit, but if you stay disciplined and you stick to your plan, there's a lot of profit to make on these condo conversions. All right, so next we're going to talk about wholesaling. And I think a lot of people know about wholesaling already, but let's say I find a property that's not in my target area and I don't want to do the renovation on it. It's too far from me. What I'll do is I'll find someone that I can wholesale that property to. All right. And so that's why it's so important to create that pipeline and to be looking for deals, right? Sourcing your deals using cold calling, probate lists to find these motivated sellers. You can use VAs, you can do text, you can do texting, all the stuff that Nancy was talking about. And you can assign these contracts for a fee without owning the actual property. If anyone has any questions on that, we can talk about that too. Really high level. This was another Foreclosures Daily lead that I was able to get. This was in Sharon. So really high desirable area. I reached out on, and this was a quick one. I reached out on a Wednesday. I had a showing on a Saturday, and they had told me how much they wanted. And believe it or not, it was much less than what I was willing to pay. So I said yes to their offer or to what they wanted right away. I was able to get this property under contract for $300,000, and I was able to assign that contract to another buyer who was going to do the renovation on it for $30,000. So his purchase price was $330,000, and when he did his full renovation on it, he was still able to make a good size profit. I was able to make my $30,000 in about 30 days and move on to the next property. So wholesaling is a great tool to have in your back pocket. All right, the BRRRR strategy. I know we're running up on time. I'm going to go quickly through the BRRRR strategy. I'll give you an example of one. But I love doing the BRRRR strategy to build my rental portfolio. It's how I'm able to scale to the point where I'm at by buying these properties, doing my full renovation, and then trying to cash out as much of the capital that I put into the property as possible. So let's talk about it. The first B, buy. We want to identify the right property. A property that has rents well below market. It may need some major renovation. We can add value by adding additional bedrooms or units, finishing a basement, and increasing the rent. And then, the fifth way to look for identifying a great BRRRR is just finding a great purchase price. Next, what we're going to do is we're going to renovate that property. So we want to renovate it efficiently. Sometimes this may include you doing some of the work yourself if you're trying to keep your costs down. All right. We're focused on value adding renovations that boost the appraisal. So what are those upgrades? Kitchens, bathrooms, landscaping, painting, curb appeal. All that adds a lot of value to the appraisal, because that is what we're really relying on, is this property appraising for much higher than what we have into it. The next thing we're going to do is we're going to rent this property out. So it really depends on your area. If you're going to rent out to Section 8 renters, market rate, or room by room. There's a lot of different ways. About half of my portfolio is Section 8, and the other half are market rate. And it really depends on the areas that they're in. One thing to note is to make sure that you find and you have the right property management company or property manager that can maximize your rents and that know how to deal with the tenants that you're putting in. So I would not hire a property manager who it deals with luxury apartments to manage my Section 8 rentals. It's a much different, it's much different. All right. And then work on maximizing your income. So are there areas like some storage areas or off-street parking or fees for pets? I know they're working on getting rid of those fees for pets, but off-street parking is a big one. In the city of Boston, especially in like an area like South Boston, I could sell or I could rent one of those parking spaces for $500 a month, believe it or not. Next, we're going to refinance. So we're going to go to a bank. The bank is going to appraise our property, and the bank is going to give us around 75% of what the appraisal comes in at. So when you're doing your numbers in the beginning, you want to make sure that you are all in for less than 75% of what you think that property is going to appraise for. That's going to assure that all your money is coming out of the property, or the majority of it is coming out of your property. Last but not least, we're going to repeat. This is how you can continually recycle the capital that you have into a property to go buy that next rental property once you refinance and cash out your money. And this is a great way to scale your business and to generate a consistent cash flow and increase your property holdings over time. In addition, when you're doing flips, you're making a lot of profit, but it's so important to keep properties and rentals. I can't stress that enough, mostly because of the tax implications that it can help out all the profits and income that you're making on your flipping side. Really quick case study. This is a very small one. I do them on much bigger scales, but I wanted to break down a really small one. This is a condo, believe it or not, in Worcester. The property was a 1-bed, 1-bath, about 500 square feet. I purchased it for $65,000. I renovated it for about $18,000, and I was able to rent it out for $1,400 a month. The bank, I was able to refinance once the bank appraised the property for $133,000. I refinanced for $106,000. If you add 65 and 18 together, it's less than 106. So I was able to pay back my lender and put money back in my pocket. And now my mortgage was roughly $800 a month. I had a HOA fee of $200 a month. So I'm all into it for about $1,000 a month. And I was collecting $1,400. So about cash flow, about $400 a month. All right. That pretty much does it on the different types of deals that I like going through in the Massachusetts area. I just want to share with you briefly my coaching program. I have an 8-week intensive program. I think the biggest components that you're going to get from working with me is that I really care about my students. I want to work with motivated students, and I want to be accessible to them as much as possible. It's the reason why I only work in a couple different states, because I want to be able to drive out to that property if they need my help. I want to provide contractors for them, and I love to partner with my students on deals. Whether I bring a deal or they bring a deal to me, we work out the details, and we partner on a deal, their first deal, where they're able to have a successful deal, ideally, and take their business to the next level. And this is just some of my contact information. So I have a website. I'm on Instagram, Penny. It's actually Penny underscore investments. Um, and that's it. I got a newsletter as well, and happy to answer any questions. But I'm gonna have Nancy come back on. I think that she had some things to go through as well.
Yes, thank you so much, Andrew.
Of
We'll
course,
come back
Nancy.
here in just a second. And okay, what are we doing here? I love,
Well, I'll stop share.
I think yeah, I say this all the
All right,
time.
there
I'm
you
like,
go.
oh my gosh, the techno of Nancy. I thought I might write a book about that. Okay. All right, let me just get my screen back up here. All right, everyone, we're going to come back to the Q&A in just a minute. Thank you for sharing your Tuesday night with us. And Andrew, thanks again.
Of
I was
course.
making notes all over the place. So yay.
Good.
So when you become a client of foreclosuredaily.com, not only do you get really qualified leads, and we have two people here tonight saying I use them and I get good deals, and Andrew just got through with a great presentation saying that he gets good deals. So you'll also get these bonuses, a six-step mailing campaign, a six-touch follow-up strategy, because remember, the money is in the follow-up. Just like you were saying about probate, it's follow-up, 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 right?
Mm.
Ready to use phone scripts, pre-written email templates for attorneys, professionally designed postcards and letters. You get my book, an exclusive link for discounted mail rates, and a link for reduced skip tracing rates. Because I think the thing that you should take away from all of this is that Foreclosures Daily is not just some company that sells you leads. They actually help you and support you in your journey to be successful. So you get these webinar trainings, every month they have a webinar. And then I also do a pre-probate webinar. So you can always reach out to me about that as well. And for tonight through Friday, there is a special going on at Foreclosures Daily. So, for probates, pre-probates, the inheritance, the divorce code, and the way you're going to take advantage of this is to reach out to your Foreclosures Daily rep. And the prices are here. So it's about $600 for 12 weeks, and you get one county, and you can add on another county for 50%. But rather than reading this to you, what you can see is if you go for a whole year, because it does take time, like when you get a lead, you're going to send out a card and, don't expect the phone to ring in the first day or two, right? As Andrew was saying, it takes a little bit of time, but you've got to get your pipeline going. So after I just went in all in and I get the yearly, so you save the most money there. So if you buy 52 weeks of leads, that's 1750, and then you get buy one and you get one. So you can add on and it becomes very cost effective the more you buy. So you might want to just do two or three counties. You can do just talk to your representative about what is going to work for you. And then, like I said, they give you all kinds of tools to make it happen. When I first started out, I wrote all my cards by hand. That's what I did. Now I've automated it, and I'm sure Andrew, you automate, right? You probably aren't sitting there writing
I
cards.
automate. I have VAs making calls for me as well. And Nancy, if I may,
Yes,
you see these numbers right there, and you saw what my last wholesale. I made $30,000 on one wholesale, right?
yes.
So it only takes that one deal to pay for these 10
Exactly. And
open.
I will say, my experience has been about every 100 leads, I average about $5,000.
Yeah.
So it more than pays for itself, but you have to work it. You have to be consistent. You have to show up. Now, if you're in Florida, they have foreclosure leads in Florida, and they have a little bit different pricing there. So you can get $479 for 3 months, $800 for 6 months. Okay, it's $799. I like to round up, get that penny there, and then $12.99 for a year. So you can see the more you buy, the more you save. And then you can add on just the a la carte, the absentee list, the free and clear tax rates for $1,000 for 500. So you get a lot, and they're really good. I'm saying you've been using them for several years, so have I, and I can say that there's other list companies out there that don't have real estate. I can't remember the first time I started it because I didn't start with Foreclosures Daily. And I remember the first few leads I got, they had guns or they had jewelry or they had art. And then I found myself, I was tracking people down trying to, get appraisals on all that stuff when I'm a real estate broker and I really don't have time for that. So Okay, I am going to, if you guys have any questions, there's my email. We'll see you next month, but I am going to go. I'm going to stop the share and go in here and give people a chance to ask questions. So, all right, let's see. Okay, y'all need to have some questions.
Yeah, we're gonna get
Right now,
something.
we don't have any questions. So, okay, well, I had some questions for you. So, could you rename that book again that you talked about, The Secrets? Because I don't know that I've read
Oh, Secrets of the Millionaire Mind.
The Millionaire Mind. So,
Yes. The author is T. Harv, Harv, Eker, Eker.
okay, Ecker. I think I've heard of it, but I don't think I've actually.
Yeah, I'm sure you've seen it. It's definitely one of those, like, not a Rich Dad Poor Dad book, not that famous, but
Yes. Now, also in your coaching, so I want to talk to you more about that. So, when you coach someone, so it's 8 weeks, right?
yes.
And do what happens after the end of the 8 weeks? I mean, are you just
Great
hot
question.
potato? What do you do with them?
Yeah, so we do the 8-week program, which is a Zoom call on Tuesday night with the whole group. We also do site visits during those 8 weeks. We'll go to all my projects. We'll look at properties in different stages of construction so they get to see, see certain things and meet everyone face to face. After the 8 weeks, I do individual calls for 6 months with my students. And I think all my students are gonna say, "Well, I still talk to Andrew even after the 6 months." Right? And
Because I
and
could
and
just tell. Yeah, you
most of
just,
the time that's fine with me, Nancy, because we're probably talking about a deal. Maybe we're
yes.
doing something together. Maybe they're asking me about this and that, and I'm happy to help. But after those 8 weeks, every month or twice a month, we're doing these calls, and I'm helping them kind of put their plan together for achieving the goals that they want to achieve.
Yeah, and I think once people get going and they actually have someone to lead them,
Yeah,
it's addictive. Like when you
definitely.
start making money, you go, I think I want to make some more, right?
That's
Okay, so
right.
I do have a question, Andrew. Someone is asking, what are some things to consider when you are wholesaling?
That's a good question.
That's probably another webinar, right? But
Yeah, it's a whole nother webinar. Wholesaling, I feel, is an art, and the reason why it's an art is because some of the times the owner, the seller, doesn't know that you're wholesaling it, right? Because most of the time, if you're getting that lead, you built the rapport with the owner, with the seller, and you're the one. Hey, I'm buying this property. So some of the things that I like to do is I like to bring in quote unquote partners, right? I don't have a big list of buyers that I don't know. I have a select group, 10, 15 buyers that I know I've worked with. And so when I see them, I can go shake their hand and not be like, oh, what's your name? So I can bring them to the property when I'm there, right? And if they're interested in the property, I can say, hey, seller, this is my partner. We're gonna be doing the deal together. So you're gonna be seeing a lot more Bob, right?
all right,
That
that
helps a lot.
that does.
Um, what are some other things to
Well, I
think
always
about?
tell people too, what do you think about this? Because I always tell people, because usually they want to like get into wholesaling, right?
Yes.
But you have to be a good negotiator. So what are the top 2 or 3 things that people need to, if you're afraid to talk to people, that's, you're probably not going to wholesale very good.
Well, I think the best way to start your negotiation is building rapport.
Mm-hmm.
Building rapport with that seller and them knowing that, like, whatever it is, you just start talking to them. If they bring up a topic that you can relate to them in that topic.
Yep.
One thing that comes up a lot in Boston is these people have owned their properties for 60, 70 years, like the family has.
Mm.
And I can bring up, well, my grandmother, and I went through that same thing. My grandmother passed away a couple of years ago, and we had owned that property for 70 years. So I totally see where you're coming from, right? Okay, I think that is a part of negotiation. The
Yes.
other part is obviously being the expert and explaining how much work it really needs, pointing
Mm.
out all the little things that they may not have thought about, or maybe they have. And maybe you can even throw out a number, a higher number, so they understand, like, okay, like, you're gonna sell the property for 500 grand, but I mean, I'm gonna sell for 500 grand, but I can't pay 500, and here are the reasons why. I'm going to spend this much. I have a realtor that I have to pay, and I have to make a profit. So it's no secret that we're
Mhm.
here to make money, and we have to
Mhm.
explain that to our sellers as well. Hey,
Yeah.
listen, we don't do this for free. We have a family that we're supporting, just like you. support your family, this is what we do.
That's what we do. Well, we
Exactly.
have 1 minute left, Andrew. So what I like for you to do is just tell everybody how to get in touch with you because there'll be replays, right? And
Yes.
so how do they what's the best way to get in touch with you?
Sure. Yeah. So I have my email, and my email is Andrew at startwithpenny.com. And I think another way is following me on Instagram. So it's
Hmm.
penny_investments, and you can check me out there. I also have my website. If you go to andrewlitchfield.com, you can go to my website and you can book a call with me. If you want to talk, even not even about the coaching program, or you want to just chat, you can book a call with me on that. I have my calendar on there and everything. Yeah, I guess those are the ways to get in touch with me, and
Perfect.
happy to talk whenever.
All right. Well, thank you so much for tonight. I
Of
really
course.
enjoyed it. I got some more info from even from our first go round. So
Great.
thank you again. Take care. Oh, you know what we do? Let's see. We have one more question. I think we'll just go ahead
Do I market to my
to
probate
probate.
leads? Do I market to my probate leads? Um, when I get my probate leads, I make calls. I don't send out a lot of mailings because everyone receives mailings. I think mailings are fine as long as you are coupling them with following up, making calls, because that's how you're going to get a hold of the person. We all get mailings. Most of the time, we're throwing out that postcard, unfortunately.
Yeah. Now I'm just going
Oh,
to do a little
making the
caveat
calls.
on the pre-probate. So what I do is I do because I have done the calls and they don't really because someone died recently, right? Like I mean, like last week, the week
Yeah,
before.
yeah.
So I did the calls that didn't work. So we do like little invitation, not postcards. We do
Okay.
like because the idea is just to get them to open it. So I have a little way that I get get the person to call me because in the beginning I did call.
Got it. Well,
And I
I know
would
that's
not
probably
suggest
really
that for
tough if they just passed away.
yeah, it's tough because they're mad. You know what I
Yeah,
mean? Not
totally.
always, but I would say like 80% of the time. So I personally have found that, but I don't do postcards. So there's a certain mailer I use.
Okay.
But again, probate I would because everybody's doing probate.
Oh yeah, definitely. I
Yeah.
think you making the calls, and the goal of any call is to set up a showing. That's
Yes.
it. Set up that showing, and then you're building rapport face to face with that owner or that seller, and that's it.
Yes. Yep.
You
All
won't.
right, Andrew. Well, thanks so much. Enjoyed it. Take
Thanks so much,
care,
Nancy, for
and we'll
having me.
see you
Thanks,
again.
everyone.
All right.
Bye.
Bye-bye.
Take care.